Hi traders, good morning, good afternoon, good evening. Welcome to my channel. Today we are going to analyze Banknifty first, and then we are going to talk about two new strategies in options which are called as trap and strip. And I will also tell you when to use these strategies and what market conditions. So do watch the video completely. So we are on a Banknifty chart now. So today we are going to analyze Banknifty basis our two key moving averages. One is 20 moving average and another is 200 period simple moving averages. So let's keep it simple and see what we can analyze. So as you can see, this is our 20 period moving average, which has been plotted on a monthly time frame. You can see that monthly chart, this was the previous month's candle, and this month it is still a tug of war between both bulls and bears. So market has not gone anywhere as such in a big way, but the momentum is still towards the upside. So let's analyze this further on a smaller time frame to understand it better. On a weekly time frame, there seems to be a problem with the internet today, so it's been raining here. Okay, so this is our weekly chart. Okay, cool. So let me zoom it a little bit for you. So we have got two reversal patterns. One is bearish engulfing, both bearish engulfing. One green candle which was trying to go up has been taken over by a red candle. So we can see that market is still holding at these levels, very narrow range bars. It looks like that this resistance has become very strong. We can expect a fall from here and come down till this level, which is our 19,000 levels, which shouldn't happen ideally. Let's see what market does, but at this level, if this happens, there's going to be a huge fall. So let us analyze this on a daily time frame. Let's see if there is strength there on a daily time frame. On a daily time frame also, we have got an engulfing pattern, and there is a huge sell-off happened on Friday, and the market is now resting. Bank Nifty is resting at this level. Okay, we have been on this level multiple times till now. 1, 2, 3, and this will be a fourth. If tomorrow, don't be surprised if it opens here and it rallies back. It can happen like that. So 21,200 is a level where it can rest. So this has been consolidating in this range for quite some time now. This is a daily chart. If it breaks this side, then there is a fall. If it takes a bounce this side, then there will be an uptrend to continue till this level. Okay, so now let's analyze this on a 5-minute chart and see what has happened on Friday. So this was our 14th August chart, 9:15. So this was our opening candle. See this candle. See, the location of the candle is right on the 200 period moving average. Whenever you see that the price is crossing from below to 200 period moving average, then you can see there will be a lot of resistance, because considering 200 period as the most strongest moving averages of all, you consider it as a China wall. So it is not very easy for the price to actually break that barrier and go above it in one shot. Maybe it will be going with one candle up, but later the immediately selling pressure will start coming from there. So that's what we have seen on this day. It has crossed above, but there was a selling pressure. The price again came back, came down, again it tried to go up, again the selling pressure, and from there it was not able to sustain, and then bears got heavily, bringing the market down. So there were like couple of setups here which we could have traded. This was one setup where you can see that 200 period moving average was respected and there was a short entry. Okay, and again there was an entry here for addition. Again it has gone up, got rejected and came back, and from there you could have got this beautiful rally. It looks very easy on the charts to comment, but it is very difficult to identify these patterns when the market is live. So you have to be very watchful and very careful. Always have one particular rule in mind, that keep these two key moving averages in mind, and whenever you see that the price is below 200 and coming near 200, then look out for a short entry like this. And the same thing happens if the price is above the 200 and it is coming near 200. Look out for patterns where you can buy for a long entry. Simple rules. So here you can see there was a lot of gap between 220 and there was a gap between 20 and the price. So we have to wait for these kind of patterns to form, right? So this was a reversal pattern, and once this high was broken, you could have taken an entry and this would have been your stop loss. So there is a fall and there is a retracement, and the retracement was only till this level. We can expect there will be a further fall down on Monday. So the market looks bearish to me as of now. Let's see what it has to offer on Monday morning. So this is a very simple method of trading. I use this in my trading, and you can simply follow these two rules, that you have to always trade in the direction of the 20 period moving average. Always trade in that direction. Okay, now let's go to the stocks which we have mentioned last week. So let's see, these were the stocks: Tech M, Dabur and Voltas. So Tech M is still in the bullish trend from where we have taken it last week. So last week when we spoke, it was at this price at 661. Now it is at 710 was the peak it has touched. So it still has a lot of potential to go up. So hold on to this. Dabur has come down a little bit from these levels, but again you can accumulate till the time the direction of the 20 is towards up. Voltas still is good uptrend, so you can hold on to this. So I've added to this my portfolio as well. Okay, now coming back to the option strategy. So let me do a reset for you, and I'm using a tool called Opstra Define Edge. So all of you might be aware that let me take you to the option chain. So this is our Banknifty option chain, which is dated expiry 20th August. Okay, so these are all in the money calls and these are all in the money puts. So today I'm not going to touch about basics, but I will tell you that that if you sell a call and if you sell a put at the same strike, it is called as a straddle, a short straddle. But if you buy this and buy this at the same strike, it is called as long straddle. So let us start with long straddle and try to understand this better. So I have chosen 20th August expiry, 21,700 was the strike at the money. So we try to buy this call and buy this put. So we can see that this is our long straddle setup. Our profit on T plus 0 is 54.18. You will start making money once the market breaks 22,337 or 21,063. So what is the range we have here? we have a range of about 21063 minus 22337. So it's a range of about 1200 points. So usually weekly range is about 1500 points. So even if the whole week passes, if the bank nifty doesn't move anywhere, then it's a problem. You will end up in this loss, and the loss will be in the range of 15,000 rupees. Okay, so but here the loss is limited, profit is unlimited. If you reverse this position, short straddle, your profit will be this and loss will be unlimited. So we have to be smart when to use which strategy. So now let's understand what is a strap. So if you take this long straddle and then have a higher number of calls, we are shifting our position. So our view is changing now. We say that market is bullish and you have safeguarded your interest and you have taken a position in the direction of the market. Your maximum loss is 23,000, but your maximum profit is unlimited. So this you can do. This is called as strap. Okay, so this is called as strap. So we have 2 calls and 1 put. This can be used if you feel that there is some news which is going to come up and which is going to take the market higher in either directions, either this or this. This is especially for bullish. So if you feel that the market is going to go up with some kind of a news, then you can definitely go for this strategy. Now similarly, if you come back to a long straddle again and increase the quantity on the put, so that means your view is bearish. What is your view? Your view is bearish and you're expecting the market to go up. Now the market is go down. Now the market is here at 21,679. So this is called as strip. This strategy is called as strip. So strap and strip. Strap, you have 2 calls and 1 put. Strip, you have 1 call and 2 puts. That is the difference. Okay, so this strategy, when do you want to use? It can't be used on intraday basis because intraday you will not make money on this. You have to use it on a monthly time frame. So initially, if you are not having too much of time to watch the market, you can definitely form a view about the market and then take a monthly position on this. But the monthly, the spread also increases. You have to keep that also in mind. And if you do it on a monthly basis, this range can be up to 2,000 or 3,000 points, which is also risky. So mostly these look profitable on the chart and looks really exciting that you have limited loss and unlimited profit. But remember one thing, the market will never move this much in a month. Okay, so the maximum range is your ATR, which is up to 2,000 points or 3,000 points in a month maximum. So you can say that the market will remain there. So that is the reason most of the people go for a short strategy. So this you can do only if you are trading results for any particular stock. You can definitely try this strategy and it can give you better results on stocks, because the stocks move close to about 5 to 10% or even more than that at times. So that will be profitable for you. Okay, so let's see if we can find some more stocks for this week to add. I will go to my scanner. My scanner is already open here. Okay. These are cash stocks, about 76. If futures we can see only these three are there, which we have already identified. No, there is one more, which is Tata Motors. So let's see Tata Motors. Let's add Tata Motors here and see the chart on a weekly time frame. Let's look at the chart from monthly time frame. Monthly trend is down because moving averages are turning down, but the price has taken a retracement for 65 levels, and this can be a resistance for it, 151. Now let's see weekly trend. Weekly trend, it is 20 is supporting the price. Super trend is also given an entry. Price is moving up. Next resistance is at this level, 160 to 180. So it looks bullish for now. So let's go to a daily time frame. Daily time frame, price is holding above the 200 period moving average, which is really good. It has not come down, so let's see. But this is a bearish pattern. We have to wait for this support where we can take an entry. It should not break this 200 period moving average on this time frame. So for now you have to watch this for a couple of days and see where it goes. If it breaks this 200, then you can take a short entry, or you can leave this stock if you're wanting to add the portfolio. But these three you can continue to keep. So Tata Motors is one thing which you can monitor at the moment right now. Okay guys, thank you so much. That's it for this week, and do like, subscribe and share my videos. I'll bring in some more new concepts next week, so stay tuned and keep watching my videos. Thank you so much for watching.